Yesterday, we saw quite a bit of activity on the market. Safaricom managing to gain some rise in momentum, but it's actually interest in the industrial segment of the market that seems to be triggering things. We've got headlines this morning showing that investors are pursuing dividends within that space. What's your view on the industrial segment of the market right now?
Well, the industrial segment has seen a fair rise in prices over this year, with PEs moving up from around 11 earlier in the year to around about 14, which is where it stands right now. So investors are looking there as opposed to the banks, which are fairly higher. And the good thing about the industrial sector is that it carries some counters which have a history of paying out very good dividends with high yields, such as BAT and East African breweries. So that is probably where investors are looking.
Well, the bet is that the biggest winners will be the manufacturing players, or some of them at least. Let's take a look, before we get into the cement players and analysis on that front, into some of the operating environment that they're operating in right now. We had yesterday the closing day for Kenya's 31.6 billion shilling 9-year infrastructure bond sale. It's the biggest bond issue in East Africa's largest economy. We've got results being expected today. What are you anticipating on that front?
Well, the coupon that was offered appeared quite low for a bond of that tenor, and the expectation is that the yield will be slightly higher, ranging around 7%. So a lot of anticipation is on the actual result, because we should see it fully subscribed, given that there is still quite a bit of liquidity on the market. We'll definitely see a successful bond offer.
If successful, let's look at what this would be spelling then for the cement players. The likes of Athi River Mining, which released a pretty impressive first half results recently, showing a profit up 16%, earnings per share up by the same margin.
Well, generally, I believe that this is going to be very positive. The outlook going forward for the entire cement industry is very positive, and Athi River is at the forefront of that. The price is now at about 160. It has gained quite a bit over the course of this year, and the rest of the cement players are going to generally benefit, because we're going to see a lot more infrastructure development in the country. The government is going to be pumping in quite a lot in infrastructure as well as power. So we should see some good gains and good positions being taken in such counters.
Let's look at Bamburi, because it has been struggling. It's been one of the laggards in this sector. It's a subsidiary, of course, of Lafarge, and it posted a drop in profit to 3.5 billion shillings for the same period, and those results coming in below expectations. What's your view there? Because we've got that share price sitting at pretty high, where Kestrel yesterday saying they see fair value at 175 shillings 35.
Yeah, well, based on their result, then there is the general feeling that the price is a bit too high. Unfortunately, Bamburi is not a very liquid counter, and doesn't trade as much as some other counters on the market. So even those who are holding the counter don't trade it very frequently, and that's why we cannot really see a true valuation on the market on that counter, precisely just because of lack of liquidity.
Does the same hold true for East African Portland Cement? Because we know that Bamburi has a pretty hefty stake in that company. It owns 25.3% stake on that end. Is liquidity a problem there? Because we haven't seen that share price move of late or in quite a while.
Very true. That's the same case with Portland as well. It has a very small shareholder base, and a lot of the shares are held with very few investors. So when shares are held in this manner and they don't trade very frequently, then it'll take quite some time before the market actually prices it correctly.